Welcome, and what's going on, everyone? You're tuned in to XRP Global Crypto, your go-to source for everything happening in the world of digital assets. I'm your host, and today we are diving deep into one of the most talked about moments in the crypto market right now. The big rally that had Bitcoin, Ethereum, and XRP bulls absolutely fired up this week. That rally is hitting the brakes. Demand is cooling across the board, and we need to break down exactly what that means for your portfolio, your positions, and the bigger picture moving forward. So if you're serious about crypto, if you want to stay ahead of the curve, you are in exactly the right place. Sit tight, because we've got a lot to cover today, and every single second of this video is going to be worth your time. Let's get straight into it. So let's set the scene here. Cryptocurrency prices are showing broad weakness on Thursday, and this comes right after one of the most exciting rallies we've seen in months. We're talking about a week where Bitcoin surged all the way up to $82,850, its highest price point in 3 full months. 3 months. That's not a small deal. That got traders pumped, that got retail investors excited, and that had the crypto community buzzing on every platform you can think of. But here's the thing. As of right now, Bitcoin is sitting just above $81,000, and that upside momentum, it's looking like it's hitting a ceiling. Both retail and institutional demand appear to be pulling back at the same time, and that combination is creating a situation where the market is pausing and taking a breath before it decides its next move. Now let's talk about what's happening with the altcoins, because this isn't just a Bitcoin story. Ethereum and XRP are both showing weakness that mirrors what we're seeing with Bitcoin right now. That's actually really important context, because when the big coins all move together like this, it tells you something significant about the broader market sentiment. It's not a coin-specific issue. It's a market-wide cooldown. Ethereum, after briefly pushing above that psychologically massive $2,400 level, is now consolidating just above $2,300. XRP, meanwhile, is holding on just above that $1.40 support level. Both of these assets had serious momentum behind them earlier in the week, and right now they're in that classic pause and reset mode that traders know very well. The question everyone is asking is whether this is a healthy consolidation before the next leg up, or whether this is the beginning of a deeper pullback. That's exactly what we're going to break down today. Let's zoom in on what actually fueled Bitcoin's push to $82,850. Because understanding that rally tells us a lot about why it's stalling out now. A big piece of this move was driven by investors increasing their risk exposure through US-listed spot Bitcoin ETFs and through derivatives markets, and the numbers were genuinely impressive at the start of the week. On Friday, Bitcoin ETFs saw inflows of $630 million. Then on Monday, another $532 million came in. Tuesday followed with $467 million in fresh institutional money flowing into these products. If you're sitting there thinking those are big numbers, you're right. That kind of inflow signals serious conviction from institutions, and it was absolutely one of the key engines behind that push to the $82,000 range. But here's where things get really interesting, and a little bit concerning if we're being honest. After those massive inflow numbers on Friday, Monday, and Tuesday, Wednesday came along and completely changed the story. ETF inflows on Wednesday, just $46 million. That is a dramatic drop-off from the hundreds of millions we were seeing just days earlier. We're talking about inflows falling by roughly 90% in the span of 2 to 3 trading days. That kind of decline in institutional appetite is not something you can ignore. Cumulative inflows into Bitcoin ETFs now stand at $59.76 billion, with net assets under management sitting at $108.76 billion. Those are still massive, impressive numbers in the big picture, but the directional trend in daily inflows right now is pointing downward, and that's putting a lid on Bitcoin's ability to break higher. And it's not just the ETF market where we're seeing this cooling off. Bitcoin derivatives are also flashing similar signals. Perpetual futures. Open interest, which is essentially a measure of how much active money is engaged in the derivatives market, came in at $62.12 billion on Thursday. That's down from $64.17 billion just the day before. When open interest drops like that, it typically means traders are closing out positions rather than opening new ones. It suggests that the speculative energy that was driving the rally earlier in the week is starting to fade out. Now, that doesn't automatically mean a crash is coming, but it does mean the market needs a new catalyst, a new reason to push higher, and right now that catalyst isn't showing up yet. Now let's talk about Ethereum's ETF situation, because the picture there is also worth paying attention to very closely. On Friday of last week, Ethereum spot ETFs pulled in approximately $101 million in inflows. Pretty solid. Monday brought in $61 million, and Tuesday saw nearly $98 million in fresh inflows. So Ethereum was definitely attracting institutional attention in a real way. But then Wednesday hit, and just like Bitcoin, the numbers dropped sharply. Ethereum ETFs only recorded $12 million in inflows on Wednesday. Cumulative inflows for Ethereum ETFs now average around $12.19 billion, with net assets under management at $14.01 billion. Again, big numbers in the grand scheme of things. But that sharp single-day decline tells you that institutional demand is cooling off just as fast as it heated up. That's something serious Ethereum holders need to keep their eyes on. Here's where the XRP story becomes genuinely one of the most exciting parts of today's breakdown. Because XRP is not following the exact same script as Bitcoin and Ethereum when it comes to ETF flows. While Bitcoin and Ethereum saw their inflows collapse on Wednesday, XRP spot ETFs actually saw increasing inflows throughout the week. On Monday, XRP ETFs pulled in $3.87 million. Tuesday brought $11.28 million in inflows, and Wednesday saw $13.03 million flow in. That is an upward trajectory. 3 straight days of increasing inflows, at a time when Bitcoin and Ethereum were seeing their institutional demand dry up. Now, the dollar amounts are smaller in comparison, but the directional and momentum here for XRP is genuinely different from what we're seeing in the broader market, and that matters enormously for anyone watching the XRP ecosystem closely. Beyond the ETF flows, there's another data point on XRP that is worth highlighting in a big way. Retail participation in XRP derivatives is actually strengthening right now, not weakening. XRP perpetual futures. Open interest climbed to $2.61 billion on Thursday, up from $2.59 billion just the day before. While that might sound like a small increase on the surface, the direction matters a lot. Compare that to Bitcoin, where open interest is declining. XRP is going the other way. Retail traders are actively opening new positions in XRP derivatives, which suggests growing speculative interest in this particular asset, even as broader market enthusiasm cools. That's a really compelling contrast, and it's one of the clearest signals in today's market data that XRP deserves your full attention right now. Now let's get into the technical analysis, starting with Bitcoin, because this is where it gets really detailed and really important for understanding exactly where price could go next. Bitcoin is currently trading around $81,346. Now here's what the charts are telling us. Bitcoin is holding well above both its 50-day and 100-day exponential moving averages, which are clustered in that $75,206 to $76,200 range. That's a significant bullish foundation. As long as Bitcoin stays above those EMAs, the overall trend remains constructive. However, and this is the big but of the moment, Bitcoin is still trading below its 200-day EMA, which sits at approximately $82,153. That 200-day EMA is acting as overhead resistance right now, and it's one of the key reasons the rally has stalled at these levels. The momentum indicators on Bitcoin's daily chart are telling a nuanced story right now. The MACD histogram, which measures the difference between shorter and longer-term moving averages, is still in positive territory, which is technically a bullish signal. And the Relative Strength Index, or RSI, is sitting just below the overbought threshold at around 69. Now, an RSI of 69 is close to overbought. 70 is typically where that threshold kicks in. And that tells us that while momentum is still there, it's getting stretched. Further gains from this level are going to become increasingly difficult to achieve without either a cool down in RSI first or a major new catalyst pushing fresh buyers into the market. For a decisive breakout to happen, we really need to see Bitcoin close convincingly above that $82,153 and $53 200-day EMA on the daily chart. If Bitcoin can manage that daily close above the 200-day EMA, that would open the door to a continuation of the broader advance and potentially a push toward even higher price targets. But if it fails to break through and the ETF inflows continue to decline, then the next area to watch on the downside is that 100-day EMA sitting near $76,200. Below that, the 50-day EMA at $75,206 provides another layer of bullish support. As long as Bitcoin holds that EMA zone on any pullbacks, dips should be treated as corrective, within the ongoing uptrend, rather than signals of a major trend reversal. That's the framework bulls need to be watching right now. Defend the EMAs on the downside, push through the 200-day EMA on the upside. Shifting our focus over to Ethereum, which is trading at around $2,338 right now, and the technical picture here is best described as neutral to slightly bullish. Ethereum is holding above its 50-day EMA at $2,266, which is a positive sign, but it's currently capped beneath the 100-day EMA at $2,344. That's a really tight range. Ethereum is basically sandwiched between two key moving averages right now. Additionally, Ethereum is tracking an upward sloping support trend line, with the most recent reaction area around $2,288. That trend line tells us that buyers are still defending higher lows, meaning there's still a base of support underneath the price, even as the broader momentum fades slightly. The MACD histogram on Ethereum's daily chart is marginally negative, which is a mild warning sign. It suggests that upside momentum is fading rather than building. The RSI is sitting around 55, which is actually a pretty balanced reading. It's not screaming overbought, it's not screaming oversold. It's roughly in the middle, suggesting that the market isn't making a strong directional statement right now. For Ethereum to turn convincingly bullish in the short term, it needs a daily close above that 100-day EMA at $2,344. A break above that level would then expose the next major resistance zone at the 200-day EMA near $2,546. On the downside, if Ethereum loses the 50-day EMA at $2,266, that would weaken the constructive technical setup significantly and open the door to a deeper correction. Now let's close out this breakdown with XRP, and this is where the analysis gets particularly layered and fascinating. XRP is trading just above $1.41 right now, and while the broader technical bias for XRP is leaning bearish based on the positioning of the longer-term moving averages, there are some genuinely encouraging signals developing beneath the surface. XRP is still trading well below its 100-day EMA at $1.50 and its 200-day EMA at $1.74. Those overhead averages represent significant resistance that XRP needs to eventually reclaim to shift the broader trend. However, XRP is managing to hold just above the 50-day EMA at $1.41, which is keeping the immediate technical picture from falling apart completely. The RSI is around 54, and the MACD histogram is fractionally above zero, meaning the downside pressure is easing, even if it's not yet fully reversed. The key levels to watch are resistance at $1.46 and $1.50 on the upside, and support at that 50-day EMA of $1.41 on the downside. Combine those technicals with the steadily increasing ETF inflows and the rising derivatives, open interest, and XRP is shaping up as one of the most watched assets in crypto right now. That's the full picture. Folks, stay sharp, stay informed, and we'll see you in the next one right here on XRP Global Crypto.